And welcome into Market Talk here on this Thursday, June 30th, wrapping up the month with a lot to talk about in the market trade today. I'm your host, Jesse Allen. Thanks for joining us. Find us online, markettalkag.com. That's our home on the web. Markettalkag.com is where you can find us, all of our social media links, our streaming sources, our radio affiliates, and much more. Well, again, it was a pretty volatile day in the market trade today. USDA reports. We had some outside market influences, a lot to discuss. Let's say good afternoon to our good friend Bryan Doherty with Total Farm Marketing joining us today. And Bryan, good afternoon, sir. I know it's been a busy one as we kind of just catch our breath now that the trade has wrapped up for the day. A lot to take in, some pressure there at quarter wheat for sure, and just a lot to really take in today, Bryan.
Yeah, a lot to take in. Just further extension of the kind of the harsh downtrend that prices started really early in June, and they just haven't let up. And you're probably seeing some very significant fund liquidation along the way. You've just got this sort of negative across the board sense on everything, whether it's the economy, interest rates, inflation. Uh, Copper is kind of a a much watched commodity, as it's generally viewed as one of the indicators of economic strength, and that has been nosediving. So, so we got some big reports out today. On the surface, neutral. Hard to get any real direction out of the numbers today, and we can go through those if you like. But there are some asterisks there that talked again about resurvey and talking some key states that while they're collecting data, we're still in the throes of planting or attempting to plant. And so July will have more information now for the market to work with that it didn't have here at the end of June.
Yeah, and with those USDA numbers, you hit it right on the head there. With the resurveys coming up, especially Minnesota and the Dakotas, were indicated in the report. And then you mentioned it too. There was still planting going on in some very key states, so maybe hard to get a real handle on the numbers. Yeah, everything felt neutral, whether it was grain stocks or acreage today. The soybean acre number, I know that was the headline that surprised some folks. What are your thoughts with that number coming in lower than the pre-report estimates, Bryan?
Well, when you first read the report, it's a real attention getter. So all of a sudden, soybeans come in 2 million acres less than the pre-report estimate, and then you're wondering, well, okay, why isn't the market, let's say, limit higher? That's a big number. 2 million acres at 50 bushels, that's 100 million bushels right off of carryout. And so you start digging a little bit more, and uh, basically in the report, it did indicate these resurveys for those three key states, and so that's going to be something that we'll have to see. So, reading from the special note, it indicated nationally left to be planted was 4.3 million acres. Soybeans left to be planted 15.8. Now the 4.3 was in corn. So, you're past when they do this survey here, according to the note, survey between May 28th and June 16th. What's the interesting part there is probably most of the area in May 28th was already past the prevent plant date for corn. So did they continue the planting in June or not? So that'll be a wild card for corn. The way the market behaved today, um, it kind of thinks maybe it did. It's very reminiscent of 2019 when we had all that late plant too, and then resurveys and these kind of things. So, uh, um, but the market has if you had an alignment of 6 to 10 day forecasts that were, if you're betting on, what kind of weather do I need to really spruce up the crop? You need some heat units and you need some rain. And basically, the entire Midwest has had, I think it's 4 days in a row now with the 6 to 10 day forecast indicating that.
Well, Bryan, specifically on corn, I know across the board, we've done some chart damage now here through the month of June. We did more today. I think December corn was getting down around its 200-day moving average, if I
Hmm.
read that right. I mean, you look at that now and take into stock the reports today and throw on top of it some of, just end of the month type trading today as well. I mean, what do you make of dew crop corn? Are we going to continue to trend down if we I mean, do we got a target below us here? Do you think we could find a bottom still above 6? Is it hard to say right now?
Well, great question. Remember, we came from a high level, so that's one thing. Two, you had a lot of buildup of just everything in commodities and inflation driving the market, or at least rationalizing why you're buying the market. But when we look back historically, I went back and looked at 2014, 15, 16, 17, 18, 19, 20, and 21. So in each of those years, we've had some sort of a drop off or pullback, and I call it from the spring high to the summer low. And on average, that's about 25% in corn. So if we take the 767 high in corn, it's actually just a sliver under 25 percent. So if I take 767, Jesse, and again work the math, um, and use even a 24% dropout, that's about 583. So if you use 25%, you're around that 575 level. And so now today with December corn closing at 620, all of a sudden that's in reach. Now, for some of us, myself included, the speed at which it seems to want to get there is pretty abrupt, considering we've got a crop that's got okay ratings, have actually gone backwards the last 2 weeks. A lot of dry in the eastern corn belt, a lot of dry in the western corn belt. So these much advertised rains really need to materialize. Otherwise, I just can't help but think you've got a late crop and a small crop in size that that'll be challenged.
Well, looking as well, the wheat markets felt some pressure here today, some pretty big numbers to the downside there. I mean, what do you make of the wheat market? We got Chicago wheat now back into the eights, and KC wheat in the nines, and spring wheat in the nines. I mean, uh, man, again, just another dismal day across that wheat complex, Brian.
Yeah, well underneath today, just a solid close under the 200-day moving average, and now we're starting to get to price levels that we talk about pre-war, and we're down to those levels or less. So, what's for the bulls? What they're disappointed in is, they look, we got all this uncertainty in the world, and it seems like anytime anybody even mentions the possibility of moving some grain out of Ukraine, the markets tip over. And so there was some talk today of maybe one ship coming out, maybe not. Can't get any confirmation on that. Um, Logistically, it just seems the country is in a tough spot. U.S. harvest approaching 50%. Today's numbers were neutral. Just horribly disappointing day. Again, some technical selling. I just think you've got maybe end a quarter, maybe it's just managed money, just wholesale liquidation. So if we're taking the war premium back out, we're back to levels that are still high priced historically for wheat. So that's what we have to remember. Um, but it doesn't look like the world's really in a position to add just significant copious supply. So now the key is to see whether or not the end users in corn, beans, and wheat take a look at this and go, you know, today's reports didn't tell us the supply picture is changing. Um, Maybe it's time to step and start buying this stuff. If it was a good value before when it was on the way up, it's a better value now.
Very true. And I think as well, and we alluded to this, it's the end of the month, and typically at the end of each month we will see some volatile trade and maybe some liquidation, balancing and squaring the books ahead of the new month. So we look at that. I know there was some outside market pressure today as well. Maybe that helped to trigger some sell stops here, or some orders that were underneath these markets today. I mean, there was significant outside factors too, not just the USDA reports today that seemed to kind of bleed into everything, Brian.
There was there, and that's been huge too. Yesterday we had the energies make this big reversal. Now they're down $4 again in crude oil. So a good start to yesterday for the bulls in the crude oil, but a poor finish, and then follow through today. So crude oil's lost its upward momentum today as well. We're back through the 50-day moving average. So the key to these moving averages, we talked about the 200-day with wheat under that. That's the average price for the last 200 days. So to me, it's a big kind of momentum indicator. Where do we sit there? A lot of these markets too have been very deep into the oversold territory. Some even giving some buy signals, but again, it's short lived. So it feels to me that without this perceptive worldwide a view of anything but slowing economy, higher interest rates, inflation, that investors are just growing leery of trying to own anything right now, is what it looks like. So that's what it looks like now. Again, I want to be true here. Bean prices are still at their best level than they've been in almost a decade or a decade. Not near the high of this year, but corn prices, still over $6. Old crop, good basis levels. We're seeing July today in the board, still over $7, 7.43, and wheat still at historically high prices. So it's always a disappointment, but we always have to be relative in our thinking. It's a downtrend. Longs are getting out. Shorts are maybe adding now. It's easy to do that when you're on the right side, and that adds additional pressure.
Brian, as well, I'd love just your thoughts on this. I saw someone comment about this on Twitter here today, and just the general thought of how, a marketing plan is not built on a day like today. Today is a day to manage your marketing plan and manage your emotions. And we've talked about this time and time again, but obviously, you look at the way things are today, and as a farmer, a seller looking at the trade today, it's all about managing, and hopefully you set yourself up to manage some of that risk here, just with the way the market acted today.
We call it prior planning, prevents poor performance. That's one way to look at it. We also call it scenario planning. It's in preparation for these type of moves. So as we've talked about this almost endlessly. When you get sort of into that late May, June, if you do have up markets, we've talked about how historically when they tip over really fast. It's always disappointing. It's always emotional. A lot of the fundamental factors are still there. We've been talking about that today. The war is still on. um, but when the market just decides it doesn't need to buy it or chase it, you get this. And then what adds to it, and this is why the pre-planning is so important, is because prices can move and often do further than you expect. So we talked about on the way up, what you had was sellers getting stopped out of the market, and then people who maybe were short getting margin calls. So they're buying back, saying, I got to get out of the way. Same thing on the way down. You got a lot of people selling today that aren't bearish, but they're giving up on their long positions because the charts are telling them to do that. And then you've got plenty of people who are probably saying, you know what? This margin call is adding up. So they're selling. They don't necessarily want to be, but they're selling. So you get some new type of selling involved with the market. And then the last one is I alluded to this before. You've got the person who may have sold before, and they're looking at this going, man, looks weak. I'm going to sell more. It just keeps working for me. So it all adds to the acceleration, and that's what we got to remember when we're thinking ahead. That well, we don't really, the mindset is, well, surely we won't see $6 corn anytime soon. And that was 2 weeks, not even 2 weeks ago. And here we're knocking on the door of new crop at $6. So it's the speed that always gets us.
It definitely is a lot of things to keep in perspective. Livestock trade today, Brian. Hog market, a bit of a surprising reaction, I would say, maybe to the quarterly hogs and pigs numbers that were felt neutral to maybe even friendly late yesterday afternoon.
Buy the rumor, sell the fact. I think the numbers all at 99%. I kind of looked at it, and that's another thing that may bleeds over in the corn. We got a confirmation yesterday on the hogs and pigs report that all else being equal, we're going to use 1% less corn in the hog herd, theoretically. Um, so, so there was that, and the ironic part when that report came out yesterday, we kind of look at all the numbers were at 99%. So we didn't even get any variation in the weight breakdowns. Um, I you know, the, the the bigger issue on the pork and even cattle is just the economy, and will consumers step up and pay this? And so we get a report yesterday that has a supportive tone. We're down in hogs today, down in dairy today. Cattle, nice comeback in June. Nice overall neutral to firm day, but still struggling to really get any kind of a strong pop to it. I'm disappointed in hogs today. We kind of thought that equilibrium, and when July trading around 109, I guess that makes some sense there. That one went down, but those back months a little bit disappointing there. That report itself doesn't point to that defensive posturing, especially in October, down a couple of dollars today. October's running a huge discount to the July. July's 109, October's 88. Got nearly $30 factor in there. we got to think anything negative is already factored in the October price.
And on cattle as well, you mentioned a few things with the cattle trade there too. I would have to think cheaper corn prices helped out feeders today, especially that maybe spilled into the fats. Anything else you saw in cattle here today, Brian?
No, it was a good observation on your part. I think that's directly what led to the feeders. But the good news is the fats didn't fall apart, didn't follow the hog market down. And it just seems to me we've got this sort of collision course in the meats and in particular cattle where you've got sticker shock in the store, you got sticker shock at the gas pump, but you got consumers that had a lot of money left over from being locked up for a couple of years and they're spending, but they're really starting to kind of put things in check right now, especially when it's the 1-2 punch, fill up and go to the grocery store. It's a big difference. Um, but the convergence is that when you look at the cattle supplies too, we just don't see where that market grew at all or is going to grow at all. So you still got increasing population, you still got low unemployment, you've got all of these factors that you'd want to believe are well supportive to cattle. But I think you've got just this big caution. In particular, people have kind of maybe it's the 1, 2, 3 punch. They look at what's at the gas station, look at what's at the grocery store, and then they look at their 401k or whatever they invested in, and it's a rough season.
It definitely is a busy day, Brian, and I appreciate the time as always. Any final thoughts you have for us, real quick, to wrap it up?
I'll circle back to kind of what you said about managing this. You're right. That you'll manage on report days. In fact, a lot of times I don't like to do anything on report days. I like to encourage customers to be well prepared. So whatever the report says, it says, and however the market reacts to it, it reacts. So again, today's behind us now. We look ahead, new quarter, a new start here. Take a look at your crop conditions. If you're light on sales, I don't know if I'd jump in right now, but if you're light on sales, it may still be tempting given that downside projection in both corn and beans. I didn't give the bean one, but you hope that your early sales are your worst, and yet you might look out your back window and see a pretty good crop coming. So at least you got that as a backdrop.
Well, Brian, if producers need some advice, I know they could reach out to you and the folks there at Total Farm Marketing very easily online or give you a phone call, can't they?
They absolutely can. 800-334-9779.
And of course, you can find them online, totalfarmmarketing.com. With that, Brian Doherty of Total Farm Marketing. Always a pleasure, sir. Have a great, happy 4th of July weekend, and we'll talk to you next week.
All right, Jesse. Thank you, and same to you. And keep it safe, everybody.
Brian Doherty with Total Farm Marketing. That's going to do it for the show here on this Thursday, June 30th. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon. Good stuff, sir.
Yes, sir. Thank you, Jesse. Good seeing you again.
Yeah.
Hope everything's good. You headed anywhere for the weekend, or?
No, we're sticking around here. Nothing crazy for the weekend here. Just
There you
gonna
go.
take it easy. So how about you?
Pretty much the same. Yeah.
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 Yeah. Nope,
Yeah.
nothing too crazy here. Things are good. Just keep them busy.
All
So
right. Thank you, sir.
all
Talk to you
righty, take
later.
care.